What's going on, Trade Pros? This is Mark from Trade Pro Academy, and in this video, we are going to wrap up our 5-episode mini-series on 2020 outlooks with a final look at crude oil and the outlook for the year 2020. So let's get into this, guys. If you haven't had a chance to yet, please make sure to subscribe to our page, check out that notification bell, get notified anytime we go live or anytime we drop any new content. In addition to that, if you guys can go ahead and smash that like button, that's really going to help us out with the YouTube algorithm, and that's also going to show us that you guys are enjoying the content we're putting together for you. So I'll give you guys a moment to do that. We'll see you in the next slide. All right, Trade Pro. So as promised, here is our agenda for this video. We're going to take a quick year in review of 2019, look at some of the key performance metrics for CL for 2019, as well as look at some of the key drivers for the year. And then we're going to look into what we're all here for, the outlook for 2020. This includes any key drivers and risks, some of the themes to keep an eye out for in the crude oil markets. And then we're going to wrap this up with a look at the technicals. We're going to look at the charts and see if we can give you guys some key levels to keep an eye out for into the 2020 year. So without any further ado, let's jump into the 2019 year in review. All right, Trade Pros. So here is the slide for 2019 year in review, and crude opened the year up at $45.80, and we closed the year out at $61.06, representing a year-to-date gain of 34.46%, almost 35%. However, it doesn't really feel like it was a green year for crude oil. Crude oil did make a high in April of 2019 at $66.60, quite an ominous number there, and made a low at $44.35. This was in January on the back of the early year bid. So what were some of the key drivers for crude oil throughout 2019? Well, if you've been watching any of these series, any of this Outlook series, you'll know a majority of the driver for 2019 was with regards to that US-China trade war and the global growth slowdown. As you guys might know, crude oil is used everywhere. It's used in manufacturing products, it's used in outputs, you use it for gas, it's used in jellies, almost anything you can think of, crude oil is involved in that. Crude oil is one of the ingredients, if you will, of those products. And so when growth is slowing down, you're not getting as much demand for those products. So the demand drops off, and this kind of brings us into the next point, which is supply glut. There is and continues to be a big supply glut in the crude oil markets. And that's something that was a big driver in 2019. A lot of supply entering the market as a result of the almost explosion of US shale production. And that's something that we're going to be keeping an eye on into 2020, which we'll get into shortly. But in 2019, as part of the year in review, the US-China trade wars definitely weighed on crude oil demand, as well as the supply gluts caused by the increased production from non-OPEC members, such as predominantly the United States. All right, guys, so that was definitely one of the bigger drivers in 2019. And then we also had, towards the tail end of 2019, we did have a flare-up of tensions in the Middle East. And more specifically, this was with regards to Saudi Arabia and Iran. We had a little bit of a bombing of one of Saudi Arabia's main oil production facilities, which did take out production for a couple of weeks and has now returned more or less to full scale. But we're starting to see a flare up in tensions in the Middle East into the end of 2019, and that's also a theme that we're going to be keeping a close eye on into 2020. So that, guys, was 2019 in review, let's take a look at what the outlook shows for 2020. All right, Trade Pros. So in the year 2020, what we are expecting from this crude oil market is somewhat of a neutral to a bearish narrative. And here are some of the reasons why. There are several drivers that we're going to be keeping a close eye on. Number one is going to be the US-China trade war and the uncertainty surrounding that. A majority of the headlines in 2019 were as a result of this trade war and the global manufacturing and growth slowdown. So we'll be keeping a close eye on growth to see if growth starts expanding. If we start seeing growth expand, that would likely mean that we start seeing a little bit more demand for crude oil, which could support higher prices. All right, guys. Another driver we're going to be keeping an eye out for is the OPEC plus production cuts. So these are your OPEC countries plus Russia. As recent as mid-December, OPEC had met and they came to an agreement to keep the cuts going on into March 2020. They had already agreed to cut 1.2 million barrels of supply into March 2020. However, after this meeting in December, they agreed to cut another 500,000 barrels, and that's leading to a 1.7 million barrel supply or production cut that is in effect until March 2020. So really for the first quarter of 2020, we should be seeing somewhat we should be seeing crude oil prices somewhat supported by these production cuts. However, if there is no new extensions in regards to these production cuts, or we don't see an increased amount of the cuts, then we're likely going to be faced with more supply hitting the markets, and this will likely outpace the demand, leading to lower oil prices. Another big driver we're going to be keeping an eye on is non-OPEC member production. So as I mentioned here in the 2019 year in review, a big amount or a big share of production of oil nowadays is coming out of the United States. They have overtaken, I believe they've overtaken Russia, and they're close to overtaking Saudi as far as producing oil. They've recently become a net exporter of oil, and this is a result of the boom in U.S. shale production. All right. There's been a couple of statistics thrown around, and one of them is that up to 60% of US, or rather of crude oil in the market, is coming from the United States. In addition to this, there has been some news come through that some of the smaller non-OPEC members, such as Canada, such as Guyana, such as Norway, are going to also be pumping some more oil into these markets, adding to that supply. And so this is another thing that can weigh on the prices of crude oil, is additional supply coming into the markets. As we know, crude oil is a supply and demand market, right? So when you've got an increased amount of supply coming into the market, that's likely going to lead to lower prices until that supply can be met with an equilibrium of demand. So non-OPEC member production, if they produce more than expected, and especially if we see these OPEC members, if we see them not following through on their commitments to cut production, we've seen similar things like that from Iraq and from Nigeria in 2019. They haven't really been compliant with their quotas, and they've been producing more oil. So overall, we're leaning more towards the bearish narrative here, as for prices to be supported in 2020, you'll need to have all the OPEC members really complying to their quotas, and you'll need to have these non-OPEC members reducing the amount of production. And another thing that we've seen here is that US shale production has increased greatly. However, we're starting to see that these companies are actually starting to pay their shareholders back instead of investing in further production capabilities. And what that can result in is a lower amount of production. However, we don't really see that being the highest probability scenario. We still see a large amount of supply coming in from these non-OPEC members. All right, that can weigh on the prices of crude oil in 2020. Number four, Middle East tensions. This again has the potential to support crude oil in 2020. This can support higher prices. Generally, what we're seeing is number one, we had the bombing of the Saudi oil field in September of 2019, and more recently this year we saw the assassination of a high-ranking Iranian military official, which has also led to some tensions. And as we're seeing here, guys, anytime there's really tensions in the Middle East, because these are countries that produce a majority of oil, that can support higher prices. If we start seeing bombings of oil fields, that can take supply out of the markets, which will likely increase demand and can support higher prices. Finally, the last driver we'll be keeping an eye out for is the US dollar. So US dollar and crude oil as a commodity, it's priced in US dollars. So their movements are correlated. All right, so when the US dollar strengthens, you tend to see crude oil drop. And when the US dollar weakens, you tend to see a bid in the commodities. All right, and so we'll be keeping a close eye on the US dollar throughout 2020 as a potential means for support for higher crude oil prices. So if you guys have a moment, make sure to check out the US dollar outlook for 2020. That link is going to show up at the top of the screen shortly. If you guys can check that out first, that'd be great. Otherwise, this is a quick summary here. We are expecting the US dollar to be relatively weak in 2020. So this can definitely weigh on crude oil markets in the sense that they will support higher prices. All right, guys, so that is a overlook on our outlook for 2020 as far as fundamental drivers and themes are concerned. Let's jump onto the charts now, get you guys some key levels to keep an eye out for in this crude oil market for 2020. All right, Trade Pro, so here we are on TradingView, and what you see in front of you are the light crude oil futures. And what you do see, this is the 12-month candlestick. So each candle here on this chart represents 1 full year's worth of trading. And what you guys can see here is that in 2019, we are kind of stuck within somewhat of a range, really between $40 mark and the $60 handle. And that's kind of what we are anticipating to be the range going into 2020. So overall for 2019, what you guys will see, again, highs of $66.60, lows of $44.35, and overall we're still kind of within a range here. So let's drop down to the monthly time frame, have a closer look at this price action, see if we can give you some nice strong levels to keep an eye out for. All right, and so what I can see here is back in 2018, we had a couple of months really into the last quarter of 2018, big sell-off coming in here from that $70 region or so. So that's going to be a key level to keep an eye out for. Also, what we had was a high here right around 65 where we're currently finding some supply, and we found support right around that $50 handle. So that's going to be a key level as well. Let's draw those in. Really, guys, here simplicity is key. We don't need to mark up our charts with a whole bunch of lines. We're just looking for the key swing levels. All right. And so here, first one right up top, $66.64. Right on here, we'll plop this guy down at $50.60. And we'll just look at the remaining levels here, which was that previous swing low. That was at the 42.36 region. Yep, 42.36. And that previous swing high here, that was right around 75, and that's exactly where we'll drop that. All right, guys, so 75, we'll call it 75.30. There we have it. So that is our monthly overview. Let's drop down to the weekly and have another look here. If we can refine some of these levels out, that would be great. So Here we have right around this $66 handle, $66.60. You can see we almost pulled up into that zone, but we've caught a nice weekly reversal on some big volume, which is showing to me that we have a range in effect right now, and that range is really between the $50.30 mark and you can argue this $64 level here where we've had one top, a second top, and now what looks to be a third top on some nice big volume coming through here. So that's really the range that we've got going on into this 2020 year. We're kind of expecting the market to hover between the two. If we can get back and close below $50.30 on a monthly or a weekly time frame, then we could potentially see the downside open up into $42.36. That is our ultimate downside target for the year 2020 if we can crack below this $50.30. Alternatively, you guys are seeing this level at 64 is holding as a big resistance right now. If we can get a weekly or a monthly close above that and above this $66.65 region here, a nice green close like that, that would indicate a higher likelihood of us moving to the top end of that range right around $75.30. Given the current environment, we are favoring the downside coming out, especially with the fundamental drivers we mentioned earlier in this video. However, anything can happen here, and if the tensions in the Middle East get worse, and we start seeing, potential signs of actual conflict coming in, there's no reason why we don't see a breakout of the upside of that range and for this market to retest the upside here at $75.30. That being said, we favor the downside, and that's the way we'll be playing this market until we see a change in sentiment and a change in price action. So that's going to be a wrap for the Outlook series. I hope you guys enjoyed this 5 episode series. And what our goal here was to bring you guys, a knowledge of the fundamental drivers to keep an eye out for and some key technical levels to keep an eye out for into 2020. Whether you're a position trader, a swing trader, or a day trader, it's important to keep an eye and an ear out on fundamental data, because as a day trader, you can enter a position as a day trade, and then you can extend that out to a swing trade using your technical levels, and especially if the news flow is working in your favor. All right, guys, so I hope you enjoyed this one. Until next time, good luck and good trading. If you haven't had the chance yet, make sure to subscribe, check off that notification bell, and smash that like button. Take care, guys.